Welcome back, Middle Age Grind. And today the title of the video is Homeowners Insurance. Why does it cost so much and what can you do about it? And I was asked by a couple of different viewers of mine to make a video on this. And I'll say this, I'm a State Farm agent. I'm licensed to sell insurance, property and casualty, life and health in Louisiana. This is not a statement from State Farm. This is just some research that I've done, and then some advice, I guess you would say, or tips I would give to my customers, because this question does come up a lot. So first, I'm going to focus on what are some of the reasons why it costs so much, and specifically what's going on in California and in some different places around the country, as well as where I live in Louisiana. And I'm going to share this information I researched with you. First off, with California, and they have a very unique situation. I'd say probably one of the most unique in the country. And I got this as a great article if you want to go check it out. It's called the America First Policy Institute. Okay? This was published on July 2nd of last year. Okay, so 2024. One of the first things they mentioned, now, California's been having losses, it seems, negative years in property casualty for several years. Back in 2018, there was 13 billion in losses in California. They haven't had that. The prior largest was 5 billion. Okay, so this goes back to 2018. That stood out to me. Number two, the insurance commissioner approves or declines all rate increases. And I looked into this, and I remember having a conversation with an agent in California probably about a decade ago. It was a situation where I got an email from an underwriter. It was erroneously sent to me, and I forwarded it to the agent in California whom I didn't know, or that's not in our district. And she was very polite, and she called me. And I do remember, and this is anecdotal, but she says, "You know what our rates are in California for homeowners average?" And I thought it was going to be high. And she told me the number, and I was shocked how low it was. And I'm like, how is that low? Because I know you guys have wildfires and that kind of stuff. And she said, the state government will not permit it to go, at the time, she said, over 1% per year. So they had some artificially low premiums, which led to this, I guess, non-profitability issue in California. Okay, back in summer of 24, and I remember we got this email from our CEO. State Farm non-renewed 72,000 residential and commercial policies, and the reasons given was outpacing inflation, growing catastrophe expenses, exposure, and challenging reinsurance market. Now, this is getting a little nerdy here, but what is reinsurance? Believe it or not, big insurance companies can go and buy insurance if there's major disasters. Think of like a Lloyd's of London kind of thing. And all those costs have significantly increased over the years. And also the permitting process. Okay? So how can this affect your premiums or the losses for an insurance company? If the permitting process is dragged out, there is on most policies what they call loss of use, and that's to pay for you to live somewhere while your home is being rebuilt. Our policy pays a specific dollar amount up to 2 years. Okay, so if things are going smoothly, you're rocking and rolling, you're back in your house in 6 or 8 months, your insurance company is going to pay less of that. Well, if it takes the whole 2 years or more, and we're shelling out $2,500 a month or some number for you to rent, and you take that times 24, that's significantly higher losses. And I looked this up on several different websites because I kind of was in disbelief. And this is from insure.com. So this is going to be average $300,000 home, okay? It's going to be in all these scenarios. The national average for homeowners insurance is $2,601 a year, so a little over a couple $100 a month. In California, according to this website and other websites, it's only $1,405 a year. So And look, this doesn't break down Los Angeles to rural California. California is the largest populated state in the nation, but on average, I thought that premium would have been a little bit higher. But apparently there's some political legislative issues that come into play to try to keep these premiums low for customers. But when you have these big disasters due to many different cases, and this is, there's many different reasons why, California's situation is very, very unique. Also, I looked this up. There was someone who mentioned on Buzz's show about Minnesota and why his premiums went up. And what I found from a CBS News article dated last summer, for the last 6 of 7 years, homeowners insurance in the state combined lost money. Okay, they had negative ratios there. In 2022, there was a $6 billion storm. Okay, so I don't know what that was. Probably a blizzard or some sort. Didn't really say. And that's what I found in Minnesota. Now keep in mind, inflation, it affects everybody. So, even in Minnesota, it's not necessarily as California wildfires are making it. And look, these claims are just in the early process. They're not finalized, any of them, I'm sure, yet. So this hasn't affected nationwide for sure. But the average homeowner's price in Minnesota, $300,000, $2,652 per year, which is right around the national average. Where I live in Louisiana, hurricanes. We've had 3 in 3 years, back from, I want to say, 2020 to 2022. Ida being the biggest one. Average homeowner price, $300,000 in Louisiana, $3,600 a year. So well above the national average. Florida, we know their hurricane situation. Very populated state. According to this Insure.com, their average premium is $54.88 a year. So they are significantly higher. Okay. Another thing too, I look back, and this is according to HUD on the government's website, in Q4 2024, average home price in the United States, average $510,000. Back in Q4 2020, it took it back 4 years, $397,000. Guys, this all plays into increased coverages, inflation. Another thing too, and this wasn't mentioned, but I know homes, what are they doing every year? They're getting older. The older your home is, the more susceptible to having a claim. That's 1 year older your roof, 1 year older hot water heaters. Stuff can go wrong. So that's a 28% increase in home values, which, look, in a lot of ways, that's a good thing. Increasing home values increases your net worth, builds equity, that kind of thing. This is just a general overview on some of the reasons why homeowners insurance has gone up over the past several years dramatically, like everything else has. And like I say, California seems to be in a unique situation where there's some legislative issues on getting a proper premium. I understand they want people to pay low, but sometimes when you have these large claims, it can create nightmares as far as being profitable and who can get coverage. And then there's FAIR plans, which is a last resort. California has it, Louisiana has it, Florida has it. That's when insurers won't take you on. And those, I know in Louisiana by law, it has to be higher than any other insurance company because they want to get it out of that and put it in private insurers' hands. So this kind of explains the reasons that I found out why. This is what, as an agent, and sometimes people come to me and I try to help them out. What can you do about it? Okay? First off, find out what specifically you can do in your state. All right? This is going to be unique to each and every state. I will give you an example. All right? In Louisiana, there's the fortified roof program. All right? What is a fortified roof? Well, generally speaking, it's a roof that's built to a level that can sustain high winds in hurricane situations, which is the most claims wind is what we have down here. I know the main requirement is your plywood has to be a certain thickness. When I'm told 9 out of 10 roofs have that, so you don't have to resheet your roof with plywood in many situations. Now, they use, when you actually put what you call tar paper, they put a membrane down, okay? And you got to take ring shank screws and go every 4 inches. And this all has to be inspected, while this is going on to get your certificate that it's fortified. And then a big problem is when in a normal storm, when the shingles and you got the paper and it takes it up, what happens is the shingles fly off, the water comes down, and in between each section of plywood is like this, there's gaps, right? And the roof is one claim. When the water leaks into those gaps into your house, that makes the claim substantially bigger. And one of the things they do is they take a special tape and they tape all those seams in a fortified roof. And then you put your shingles on, nailed to a specific specification on types of nails and distance. And this is, like I said, this all has to be inspected. What that does, they use this, it originally came out in Florida. It's been kind of migrating throughout the South for sure. They've had situations where these roofs were put on into direct hit hurricane areas, and these roofs didn't miss a shingle in many situations. So homeowners insurance in Louisiana, and more than likely Florida too, I know in Louisiana for fortified roof, for State Farm, you can get up to 30 to 50% discount on your homeowner's insurance, which is huge. And I'll give you an example. In my neighborhood, a gentleman last year got a new roof. Now, he lives in about a $500,000 house. He got a quote for $21,000 just for the new roof, and I believe it was $26,000 to have the fortification done. So he paid $5,000 more. He will probably realize that savings in 3 years on his homeowner's insurance, all right? And this goes into resale value. It's huge. If you're selling your house, I got a fortified roof, this is what my insurance is, probably helps your property values a little bit. So like I say, in Louisiana, that's a specific thing. In your state, I was an agent in Oklahoma. Their big thing on top of tornadoes was hail. And they had a certain type of shingle. They had a rubber underneath the shingle, so when the hail hits, instead of damaging the shingle and the wood, it just kind of bounces off. I remember there was a significant discount for that. Every state is different, guys. I don't know, in Minnesota, California, wherever, you have to investigate that and what are some of the things you can do to, in some cases, drastically reduce your premium. This is a big thing. I know homeowners insurance companies have started this. Aerial drone inspections. Look, your home is probably subject to reevaluations over the years. They want to make sure the property is kept. And these drone surveys now, they can see a lot from the air, and it saves a lot of money in some cases doing this. And make sure these trees are off your house, that kind of thing. They don't like limbs rubbing on the house. They don't like debris in the yard. That's liability. You have an old junk car in the yard, kid comes over and plays and hurts, we got to pay a claim. That's some of the stuff you can do there. The next thing, and I know this is big with us, I'm sure many insurance companies, bundling your home and auto. A lot of times, guys, that can save 20, 25% off your premium by having everything at one place. And this one here, and I've mentioned this before in other videos and some auto stuff, but it is huge for homeowners. Your deductible, guys. Look, I remember when I first started, there was a saying, homeowners insurance needs to be devastation insurance, not aggravation. What does that mean? Well, back in the day, a lot of people had these low deductibles, $500, $1,000. Oh, I got a little storm and my shingle fell off and this broke and I got a piece of side, I'm going to make a claim. That really hurts your premiums, I know in Florida, my neighbor, he lived there. It was big. They started it having higher deductibles for hurricanes. If you raise your deductible, it can save your premium a lot. And what does this mean? Well, and I always recommend to people, if you're going to do that and it saves 20, 30, 40% off your premium, look, you have to have funds set aside. If you have a claim, especially a minor claim, you can take care of that out of pocket, right? So deductibles, raising those in a lot of cases will significantly reduce your premium, but in a situation to claim, you need to make sure you have enough funds, okay, to cover those smaller claims, right? And and that's something, is a conversation. When people have that with me, it's like, what do you recommend? And it's like, look, if you can afford it, you need to do what's best for you. These are just options that I give people, all right? And it's some of the things that can help. And I can tell you, if you've been watching me, I've had the shed fire, at the golf cart back in August. I built that shed for $25,000 in 2019. It cost me $52,000 this year. So if that doesn't tell you in just 5 short years how much things have gone up, it affects everybody, guys. Supplies, labor, So I wanted to make this video here as an informative, with some research and some specific things you can do to maybe lower your premium in your homeowner's insurance, but doing it in a way that's responsible. And if you raise those deductibles, you're on the hook, for that first whatever that is. And hopefully that helps explain some things. And if you have any questions, leave it in the comments for me. I'd love to answer them. And I'll see you real soon on the Middle Age Grind.